Sandip Agarwal, fund manager and co-founder of Sowilo, joins in right now on the show as well. And Sandip, while we would love to talk to you about other things as well in due course, but today we can't help but talk about IT simply because of the kind of up move that we've seen. Now, you were right. About 3 months back, you were constructive IT on all things. Surely you didn't anticipate a Donald Trump victory. But be that as it may, now that the stocks have rallied the way they have over the last 3 months and yesterday, what happens next? What is the fundamental thesis and what is the price thesis?
Yeah, hi, good morning, and thanks for having me on the show. So there are a couple of things. One, that while IT sector, I think, is always in a much better position than even the manufacturing space, in the sense that in manufacturing, when China plus one came, you were able to figure out geographies from where execution could be done at a cheaper or at the similar price. But IT services, particularly the software services, I think in the world we are the only place from where this business could be done at cost, in a cost efficient way. There is no competition, virtually no competition. So if you exclude the BPO, where there are some other countries which do participate, then we have 94% plus market share in the global outsourcing business. So we have basically virtually everything which could be, which is outsourced, is with India, because of the huge talent pool and the cost structure which we have. Having said so, Trump is also known as a very good negotiator. So you never know when he sees where this surplus is coming, and he can bring in some regulation, or at least he can say something on that, and that could be something which could hurt sentiments. I would not say that it will hurt the business. IT sector business cannot be hurt whatever regulation you bring in, because it is impossible to execute at those prices, at what prices we execute from India. So it is a long-term structural 7-8% growth industry, similar to FMCG, I would say, and with good margins and very strong entry barriers, almost impossible entry barriers for any other country. That is the way we see the sector.
Good morning. It's also Samina joining in. Now, with lower corporate tax rate, do you expect US companies to increase their IT discretionary spends? Because up until this quarter, the companies that were doing well were the ones that were all about operational efficiency, cost optimization. Nobody was really talking about growing revenue or spending more on discretionary. So now if I have to ask you to split the pie, where would you put the money? Which companies will spend more? Will they spend more on discretionary? If yes, which IT companies in India become beneficiaries? Would it be your Infosys and Persistence of the world? Would it be LTI, Mindtree, TCS of the world?
So yeah, it is a very good question, and we have discussed this in the past also, that right now, because of impending election issues and also some concerns on the economy, many of the clients were holding back on the discretionary side. I think what has happened with completion of election and its outcome, the uncertainty definitely goes away. At the same time, remember, we are in a weak quarter seasonally, because there are less number of working days in this quarter. So, and new budgets will get freezed by 10th of February, in my view. So we will see some positive impact coming in from March or April. So and definitely, I think discretionary spend will be released at a much faster pace, because of two things. One, there is a lot of pent-up demand in the system, which was unspent, because people were worried what will be the outcome of the election, and also how the economy will pan out, whether it is a hard landing, soft landing, what it is. Now I think all those uncertainties goes away. So you will definitely see some release of money on the discretionary side. Obviously, the players in the large cap, TCS, Infosys, HCL, Wipro, Tecam, all should do well. But I would be more keen to add something which is reasonably valued than fairly valued. And on the services side, I will be more keen to look at value where there is ER&D play. So these are the two pockets where you can make good money, in my view. Any which ways, this sector always gives good return in a longer term. Near term, very difficult to call. Also, remember, these all stocks have done phenomenally well in last 3-4 months, and there is some time correction also.
Sorry, Sandip, just wanted to get your sense of in your big three, since just on the Trump impact and that overall view from an Infosys, TCS, Wipro, and if you look at how some of these are reacted in pre-open, TCS doing fairly okay, Infosys not so much. Just trying to understand who is best positioned, or which of the companies best positioned to make the most of an opportunity if US-based companies, because of tax cuts, increase discretionary spends of the big three or the big four.
So I think TCS has a big exposure relatively to consultancy. So and consultancy is broadly, discretionary based. So I think they will be natural beneficiary of this. And HCL Tech has a very good blend of both the options. Like you have pure IT services also, and also they have good exposure to the product engineering space, which is at a borderline with the ER&D space. So they are also natural beneficiaries. So I think these three names ideally should get good business. And when if tax cuts come and there is a feeling that economy will turn around, then I think all these companies will be big beneficiary, because discretionary hold spend, which when it comes like a with a very big pressure, big force. So the growth could be phenomenal for a few quarters. So I think that is the way I look at it. And these are the bigger names, so they always get the first chunk. It has always happened in the past as well.
Sandip, just very quickly, if there is a reversal after this Fed meet in the rate cut progression, would that be seen as a sentimental negative for IT companies?
See, I generally believe that rate cut is not to do so much with the Indian IT services space. I think that it is more related to discretionary spend. So if discretionary prevails, discretionary spend comes in, and it will prevail over the negative sentiment impact of the rate cut. We in historically has not seen much impact of rate cut, but we have always seen more impact of discretionary spend.